how are you thinking at $27 of Palantir from an undervalued, overvalued perspective?
Palantir's, and we had this discussion with Tesla as well, actually. Tesla's been on a major
First
run.
of all, congrats to you and Arnie. I think Arnie has some Tesla left. I know, loaded up on Tesla at like 180. So congrats. That's done very well.
Yeah, and below that, and we were like, well, sure, it's trading above fair value, but are you really like about to sell a great company like this? And there are many like things to learn about your approach here. So first of all, sure, it's trading at a rich PE multiple, but it's a very this company isn't a mature one. Like the PE, like they're just turned profitable. It's like such a meager number that you can't really look at the PE multiple.
Why? Well, can you break that down? Why is PE not relevant because they just turned profitable?
Well, if you just turn profitable, let's say by using your cash yield, that we know that Palantir's first quarters of profitability weren't from operations. It was basically just farming treasuries. And if you get like 10 million on that and you have a 50 billion market cap, like the P is going to be outrageous, and
Right.
it tells you nothing about the company. So you can look at pricing metrics. For Palantir, it would make more sense to look at something like price to sales rather than price to earnings at this stage of the company. When they turn a lot more profitable, then the P might be a reflection of the performance of the business itself. But right now, it makes no sense. In any case, I don't really look at pricing metrics such as PE or price to sales or price to book for different companies. I only look at the actual valuation work where you take future performance and bring it back to present value. I made a video on that, my first YouTube video. And this price range is not absurd. Like you can get to $27 fair value, like reasonably. Like it's not completely outrageous. So it's not like it's super expensive now, even though it's hit all-time highs. It might be rich, especially if you're more conservative with your projections. But $27, I can easily see it keep going up towards the 30s. And just one last thing, as we talked about Tesla previously this week in our group chat, I learned a lot about selling or buying or holding when stock reaches above its fair intrinsic value from Aswat Damodran. He has very famously an NVIDIA position, and we all know what's happened to NVIDIA. Like it's gone way above and beyond. And he was asked on CNBC, like, well, here's your fair value. NVIDIA is like 3 times that. Why do you hold the stock if you're this like valuation professor? Like he's known for being like the #1 valuation professor in the world. Like, why do you keep this stock? And he said 2 things. One is that past decisions are not made under the same criteria as new ones, meaning that while you might have invested because it was under fair value, it doesn't mean that you need to keep that same criteria for new ones. Like when you sell, you make a new decision. So those are not the same. Like there's always this argument that if you keep a stock, it's the same as buying it now because you expect the same performance. Like it's a kind of difficult question. For example, people say that, well, I would not buy the stock, but I keep the stock I have. Well, you still have like a expectation of future performance from that stock. So why wouldn't you buy it? Well, past decisions are not made with the same criteria as new ones. And another one is that he gives NVIDIA a premium because he believes that it's such a like different company compared to other ones. Like he expects them to be there for the next big thing. Like he expects NVIDIA, like he doesn't know what's going to be big in 3 to 5 years, but he expects NVIDIA to be there. So he gives NVIDIA a premium just based on that. Like he does not see in the numbers a way where they are worth like at the time it was like over $1,000 in share price. But he knows that they're gonna be there for the next big trend, and I feel the same about Palantir. Like I feel
essentially they grow into the valuation. Is your point?
Yeah, and I feel the same about Palantir. We know that they've always been ahead of the curve. We know that they adopt things way before, like it's even on different companies' radars. So I expect that for Palantir as well. So that's why I'm not selling, even though it's above my intrinsic value, which is more around 25. But I mean, it's $2. Like 27, it's not absurd. So I've yapped enough. What do you guys think?
What level would you consider absurd?
At 40, I would sell my stock today.
At 40, you would sell because why? The market cap?
I mean,
Like
it's
at
just
the,
a 10%
I can't.
difference.
I can't.
no,
No,
it's not more than
at
10%.
40.
40. Okay, sorry.
Yeah, like I can't see a way to 40 as of today. Like I would really have to twist and bend the numbers, and I can't make 40 work as of today.
But you
Ask
can make
me in
like
a year and
35
40.
work.
Well, no, not I can't make it. Like above 30. No, but it's
What's
still
your
I
criteria in
give.
saying 40 no, 35 and bull?
I mean, I just pulled it out of my ass, to be honest. But like the sentiment is the same. Like 35, 40. Like it's at a range where it's at an extreme premium, I would say. Like if it reaches 30, that's not like it's still within the reasonable range, I would say. If my fair value is 25, where I see like I just take normal market projections for like the AI spending in the government and the AI software market projections, and I see like, well, Palantir is gonna keep this market share, so like it's not unreasonable.
Arnie, what do you think about this $27 level? Do you agree it's also fair value?
I would underscore something but very important Emir shared. This is kind of fair for now. What that for now means is every time we try to understand the valuation, we need to assess, okay, what is the present? What is the near future that is expected to develop from this present, and how that impact the long-term future? So that's why when we compare the valuation as of today compared with like last year, it's like we are talking about two different things. So it is true that what maybe was relatively overvalued last year, probably last year before AAP, talking in the range of 13, 14, was probably a bit too stretched. Right now, already 1 year later, which is much, but not that much in the grand scheme of things, a $13 per share would be completely an opportunity. Why? Because the company developed, the company accelerated, and we see this on the financial side. Palantir now is much more GAAP profitable. It is giving signs of acceleration, and we are seeing that also qualitatively. What I mean with that is deals. We got this last quarter the two most important contracts in the government space, so Titan and Maven, essentially paving the way for, okay, Palantir will be the cornerstone on top of which the most important programs of the DoD, which is not that they can digitalize, they need to digitalize and embrace the horde of new startups that are evolving. Now they are also pushed by venture-backed capital. So there is money, there is the opportunity, and there is the commitment from the DoD to pursue this way. And Palantir is set to be like the underlining infrastructure to capture all this trend. So the US government side, yes, is not growing as fast. But if we assess qualitatively what's happening, we can have a sense of the numbers that you also put in evaluation make sense, meaning that what were just expectations last year? Oh, Palantir is so important. The DoD must consider Palantir. Now we are seeing that becoming gradually a reality. Same thing for the commercial side. We were always thinking, but these products are so powerful. How it is possible that companies don't grasp how strongly they need to optimize their own stuff? And now with all the tools that Palantir is developing, starting from boot camps to increase awareness, then Epicon, furthermore. But then we have these new tools like AAP Now, build with AAP,
Yeah,
that
and we're
are a way to change completely how Palantir operates. And that's it. Like in 6 months already, we are talking about a different company. So what was worth 6 months ago in terms of valuation, you can do it more numerically, like you do with DCF. I like DCFs to test, and that's it. I also like to take the pricing metrics as a shortcut of valuation. So this doesn't mean multiple is evaluation, is a way to rapidly assess more or less where you are, given all the information you have. So it's not that a PE is not evaluation, it's just pricing. It is a pricing if you come out to a fair PE, only like comparing the PE to other companies. But if you say, okay, more or less, this company is worth 100x free cash flow, given these characteristics, given all these qualitative aspects that you know because you studied the business, then I would say it's just a shortcut to valuation. Long story short, we are in the fair zone, in my opinion. I consider as a reference Mariana, which is the only analyst, in my opinion, that really understood the story from the beginning. And I consider my approach closer to her in terms of conservatism. I appreciate the knives for the qualitative aspects. Valuation-wise, I think he's a bit overstretched.
I just want to like add to that, because when we talk about valuation, people think that it's static. Like I've ran into this so often. Like I made a valuation last year of Palantir. I got a fair price of, let's say it was $12 or $13.
Yeah.
And people talk to me today like, well, what happened to your fair value of $13?
There are certain
like,
people that
like,
literally blocked you and think you are the worst person on the planet because you had a
that
valuation.
happened on
We know
Twitter, yeah.
You had a valuation that people didn't agree with, and for some reason you became a horrible human being to those people.
Yeah, and then you ask them, well, can you show me your output? Like, how do you reach something higher? We can discuss this, but of course they don't actually do valuation, so they can't show me anything or dispute. They just think like, well, 13 sounds too low, whatever. But as Arnie mentioned, a valuation is really obnoxious in a sense, because you need to remake it every time there is some update to the business fundamentals. Whenever something changes about the trajectory of the future performance of the business, you need to value it again and again and again. That's why many institutional investors, banks, and so forth, they rely more on the pricing side of things, because one, if you have a portfolio of 80 companies, how are you going to make 80 valuations like constantly over and over again? Like, simply no time for that.
Well, let me ask you a question. Let me ask you a question. You came up with a valuation of $12 last year. Maybe the stock was at 15, whatever. And let's say people bought it at 15, right? Now the stock's at 27, and they're using your previous valuation on assumptions that you had that have obviously changed to say, you're an idiot, Amir. Look at you. I was buying at 15. You were complaining it was overvalued. What is your response to those people?
Good question. I don't really engage, but I mean, the thing is, a valuation will always be personal. It's always my inputs on what I believe. So you should never like take someone else's valuation at face value. You should do your own. So it doesn't really like you can discuss inputs in your models. For example, like I reached this number because I think this. Like there's always a story attached. For example, with Palantir, this is another Damodaran quote, which I think is really good. I know I'm talking a lot about Damodaran, but he says, like, for a company like Coca-Cola, like you can just look at past performance and project that into the future. Like it's like taking a book, a 30 chapter book at chapter 29. The author dies, like, finish the last chapter. Like the characters are already there, the story has already unraveled, unfolded. So you just need to write one chapter. You can do that. If you take Palantir, we're like at chapter like 5 of 30. Like the story can branch out so many ways. There's like so many unknowns. So of course the evaluation will change a lot, and it will vary from person to person depending on what story you tell attached
But
to the number.
I don't think when you came up with that $12 fair price, you were being a bear. You were just saying, hey, I'm looking at different
It's
models.
like
That's it.
this is what I'm seeing, and this is why. And
Right.
if you can't tell me, well, I have a higher number because of this. Like, if you can't give me a well-grounded argument for it, I just dismiss it. Like, I don't even care. Like, if you give me a well-grounded argument, we're gonna have a discussion. I might rethink my approach. If you're like too low, screw you. I'm like, what am I gonna? But yeah, I just wanted to like add to Arnie. Like he said, for pricing, you get a current reflection. And that's why it's so easy to use, and that's why it's so popular. Like you look at the PE today, price to sales today, like it's so easy to have a daily reference. For valuation, I mean, as I mentioned, you need to recreate it every time you're given a reason to. And keep in mind, we still don't know largely, like we're in the blind in regards to AIP's financial performance. We have no idea. Like they haven't disclosed that to us. So there's still so many unknowns. That's why valuations will differ so much from person to person. Like people who actually do a valuation, and not only like PE is too high, can't buy this company. Like, no, it's way too narrow-minded, I think.
I think you underscored very important points that also reflect a lot with my previous experience as an analyst. So I was used to run models almost every day. And that's so true. Once you analyze an utility, a Coca-Cola company, you can reasonably expect that what is happening now could be closer to what could happen in 5 years in the future. And if the trend continues, even 10 years in the future. That's kind of reasonable. With something like Palantir, you can use the same tool, the DCF, but you need to change the perspective a little bit. While with a regular, steady, very mature company, you can be relatively precise with valuation. With something like Palantir, we come out to what I tried to share many times last year, that you don't want to be too precise. You just need to use the DCF as a tool in order to test the valuation as of today, given the information that you have that today. And if we go back in time, it seems say, oh, you said $13 was the price value. So at 15, no. That's not the right way to look at this for these, let's call them growth stocks. Why? Will you try just to assess if there are the numbers in the valuation have some grounded reality? What you don't want to do is buy a price only because there are future expectations that are completely detached from the reality. So as the reality emerges, you adjust your assumptions. Frankly, we could see last year that the multiples were relatively high, and before AAP, there were not enough substance to justify.
That's a good point. Before AIP, there was almost nothing, dude, besides Foundry, which no one really cared about.
What was the stage before AAP? We saw Palantir rallying because people were starting to discover AI. So C3 AI, NVIDIA started to rally, Palantir as well. But the growth was not accelerating. It was not really clear how Palantir would have captured this increased interest. And then with AAP, things started unfolding. AAP brought to bootcamps, brought to IPCon, but more importantly, financially speaking, to a margin expansion that completely surprised everyone. Also, Mariana, that asked in the earnings call, like, you're having like a 3-4% margin that is completely unexpected, and
every quarter.
And not only that, like that kept expanding. So we don't even know what's the limit of this traction, and potentially if this bootcamp motion is so effective market-wise, Palantir can also keep growing thanks to a viral effect of network effects. We are contributing a little bit, but more importantly, clients talking with other clients of their successes. Especially now, everybody wants to deploy AI in somehow. Then you could have that sort of further growth without spending a lot in marketing, because that is effective marketing. So guess what? That brings margins even higher. Now we can assess that. We can see that company is doing the right things. Also, socially, it is contributing also in terms of awareness with our little nice hats. Thanks, Eliano. So these are more little things that matter, that gives us a hint in the future that probably financial analysts will only see in the rear, how's called the back mirror,
the rear view mirror. Yeah. So let me transition the topic, the pod to this.
Wait,
question.
can I just add small
real
thing?
quick,
Now we're gonna
what do
take
you
my
want to say?
time. No, but
We've been
as
on
you
valuation
mentioned,
for 25 minutes. We got to move on. Go ahead.
no, I just want to clear up like quickly. As you mentioned, like a DCF is only a tool, and valuation has been around for way longer than DCFs have. And about precision, like that's where people get this completely wrong. People say you can't value a growth business, also completely wrong. Like if you remember, every number needs to have a story attached to it. Otherwise, it's just financial modeling and it's useless. And that's why many of the early Palantir YouTubers ended up being so wrong. Like they just input like, okay, Palantir grew 60%, so I'm gonna input 60% for 10 years, and they got the $80 price target. I'm like, it's so useless. Like there's no story to this. How will they grow 80%? If you can't explain that, you shouldn't put it in your model. Like people let DCFs run them. They just like blank state, put in an arbitrary number. They have no idea why that number is there. If I point to your model and say, why is this number here? They're like, I don't know, just 30% every year growth, bro. Like it's so useless. Anyway, and now you can move on, Amit. Sorry.
And the bottom line is learning
Arnie won't
to
let me move on.
understand the inputs of a DCF is much more important than the actual output of the DCF.